Good evening. This is a Shadow Trader.
What are you doing?
It's the Shadow.
No. I do the intro. What? No, you don't. Just chill. You don't do the intro. I do the. I'm Shadow Trader.
Peter Reznicek,
Okay.
please.
Good evening. And it has to have some sort of gravitas, so to speak. Like you got to channel your inner Peter Jennings, so to speak, right? No, not just watch. Good evening, and welcome to another edition of the Shadow Trader Video Weekly for Sunday, July 25th, 2021. My name is Peter Reznicek from ShadowTrader.net. What do you think? Like that?
I like that.
Okay.
Sounds good.
Hello, this is my colleague Scott Gillum, and I am obviously on the road. We're doing a little different format this week. Scott Gillum is the trader of the Time Spreads Options Advisory that we have at ShadowTrader.net. I took this opportunity to do this video together with you since I'm on the road visiting some other people in the area, and we were fortunate enough to be able to trade together a little bit today,
yes,
which is nice. We're recording this on Friday, actually, the 23rd. 23rd on Friday, so it's nice. And obviously, I do these videos alone all the time, so it's only my perspective. I thought this would be a great opportunity to have somebody else's perspective on the markets.
Thank you.
As where we are now and where we may be going. So anyway, what do you think are the 1, 2, 3, whatever main factors of what's going to drive next week?
Okay. The couple of things that are on my kind of hackles of the back of my hair standing up was that Delta variant news that was out this past week. Hence, we had the big sell-off on Friday through Monday. And once that was started to be quelled and traders went back to seeing, okay, economy is still okay and earnings are coming back, we had the rebound. That's what I think is still on the horizon for next week. Do we have something that is going to come back on that news for this coronavirus? We have the earnings, probably the biggest week of earnings are coming up next week. That will either set the tone bullishly, continuously bullishly on the S&P 500, the NASDAQ and such, or it will put a new tone after those earnings are passed.
Depending on how well I couldn't agree more because, first of all, it's obvious that price action decided to negate whatever acceleration there was in COVID with the Delta variant. I get that. But you do make a very good point, and I just wanted to sort of underpin that and stress that to the viewers, is that can rear its ugly head at any time. And remember, the market is obviously scared of the economy being reclosed, slowing back down again. So I'm just saying, pay attention to those numbers over the weekend. The percentage increase, etc. Whether there's some huge explosion in cases or whatever. Totally agree with you. Earnings, on the other hand, agreed, because it's such a big week. Who do we have on tap?
On tap, the big boys. We've got Tesla on the 26th, Tuesday, after market close.
So I'm going to just stop you right there.
Sure.
Not like a type of real market mover, I would say. It kind of is in its own category, but it's a fantastic stock for day traders and short-term options traders. And so those of you who are listening who are in Weekly Options Advisory, you know that I like Tesla. Tesla is in our wheelhouse. I do a lot of options trades on Tesla. And one of the reasons that I do a lot of options trades on Tesla is because the IV is generally high. It's relatively high, compared to other stocks. So the premium is rich, and there's more or less always something to do. Recently, we had a fantastic run of rinse repeating. What was it, like 650, 500 or 600, 500 put ratios for huge credits, and then we take them off for bigger credits. That's always there. The point I'm getting to in a kind of a circuitous manner is that after earnings, those trades are there even more, right? Yes. That IV is super pumped right now. You can't do anything going into the number because it's a 50-50 crapshoot, and that doesn't make sense. But I'm such a big believer that IV doesn't 100% go away the day they report. It collapses hugely, so you may go from 85% to 50%, but you're still so high, and then you can target new areas of either up or below, depending on what the stock does. I have no idea what the stock's going to do. I have no dog in the fight. I could care less. All I'm saying is once it happens, opportunity blooms.
The other thing that Peters hasn't talked about is you can structure those trades so that you can play with that crush. Certain expirations and certain strikes are going to crush more than others. So if you know how to use the options correctly, you can use that crush, that small crush that may also happen, to your advantage.
You're trying to plug time spreads, aren't you?
Yes, I am.
You're trying to.
Yes, I am.
That was very subtle. I see that. So obviously Scott runs our time spreads advisory, and notice what he just kind of subtly slipped in there, that you can use different expiries, meaning spreading across time, which is what he does. That's his wheelhouse. And obviously, yes, you're absolutely right, because the one that's closer is going to fall apart quicker, et cetera, et cetera.
Right.
But yes, there's plenty of opportunity. All right, that's Tesla. Outside of Tesla, what else?
Outside of Tesla, on Wednesday, strap in, helmets on. It's Apple, it's Google, it's Microsoft.
All on Wednesday.
All on Wednesday.
Okay, so again, I have to stop you right there. We just talked about Tesla not really moving the market. That will hugely move the market. Obviously, whatever the outcome of those stocks are, that will be the outcome of the NQ futures, which will drag the ES futures, which is what most people look at, and that's the gap that you're going to see on Thursday morning,
Right.
which is hugely going to affect the market.
Okay, now on Thursday, Facebook. Facebook was already kind of foretold with Snap earnings
Yeah.
today.
Yep. Snap earnings pull, and Twitter reported too, or no?
No, Twitter was, I think Twitter was a couple of days ago.
Okay, but Snap pulled Twitter higher and
Yes.
pulled Google higher. Okay, right.
Facebook higher.
I mean, Facebook and
Yes.
Google higher, right.
Yeah.
Right.
So that's on the 28th. Now, on the 29th,
Mm-hmm.
if I get these dates wrong, Monday, Tuesday, oops,
No,
I'm
I think-
sorry.
I think
Apple
you're
is
okay.
on
That's Monday.
Monday.
2/6.
Tuesday is Apple,
Tuesday's
Google,
up, so it's
Microsoft.
not Wednesday. It's Tuesday.
Back it up a day.
Back it up. Apple, Google,
Apple,
Microsoft,
Google,
Tuesday.
Microsoft on Tuesday.
then
Wednesday
Facebook
is Facebook. Thursday, the big day for Amazon.com.
Right. Because not only are the Facebook and the Amazon are going to be market movers, just like the prior ones are of the three big names the prior day before. But I think with Amazon even more so, because you have other retailers kind of falling in line behind it, right? What the outlook is going forward in Amazon, you'll see movement in Walmart, you'll see movement in Target, whatever, all this stuff.
Correct.
So it's a big deal.
Right.
It's a big deal. Okay. So we've established that we are looking at two main concerns next week, that it's going to be kind of an interplay between whether or not the Delta variant does anything. Hopefully not. I mean, obviously, for the sake of all humanity, hopefully nothing's happening. But obviously, the futures will be sensitive, I think, to an increase in cases. Could be. And then the earnings. Now, let's shift gears into a technical picture. Before we get too granular about it, we just had literally one of the most amazing reversals that we've seen in a long time. I'm only going to take a little bit of credit here because I didn't get very long in this move. But remember, the title of last week's video was "Don't Panic."
Yes.
Was don't panic yet. And the yet would have occurred had we broken trend or broke the 50 MA. That would have been a very key thing. The market actually came right down to the 50. I think it double bottomed there a little bit.
Yep.
You know, I thought we were going to obviously go weaker, and then nothing below it. Could not find further sellers. Went back up. Now here's what gets very interesting. That particular day, which was Monday, right?
Yes.
Of this past week, that was on the internals. I'm not going to talk about all of them, but I'll talk about two main ones. Breadth as which is the up volume minus down volume on the New York Stock Exchange, and the advanced decline line just on the S&P. We call that ADSPD, is the ticker on TOS. Okay, the breadth was 8-1 negative on Monday, and the ADSPD, don't quote me, I'm giving a range here, it was like 460 to 475 negative. So that means that the down volume on the New York Stock Exchange on Monday was 8 times greater than up volume. So volume flowing into down stocks versus up stocks. And out of the 502?
504.
504, because I have Google, what are the others?
Under Armour.
Under Armour has 2, right?
And there's
some others.
Comcast, A&B,
right,
and somebody
CMCSA,
else.
CMCS, whatever. Okay.
Right.
So of the 504 stocks in the S&P 500, think about it. 475 roughly were down that day. That's huge. It doesn't, when you know, the internals are like my bread and butter. I look at this stuff constantly. That's basically the shadow trader methodology, the quad, etc. I've taught thousands and thousands of traders how to better understand the market using these market internals, and I can tell you those numbers are relatively rare. The 460 to 480 in the S&P, that corresponds with like a minus 2,300 or 2,500
Correct.
on the NYSE. And we saw the same thing on NYSE and NASDAQ. They were 2,500 and 2,600 or whatever. But here's where it gets interesting. So we had this very bearish day where the internals were supporting a potential move lower. The next day, Tuesday, when we reversed, we closed the day on the exact mirror image of the breadth and the AD line. That's right, 8 to the upside, 8-1 positive, and the advancers versus decliners on the S&P 500 were 460 or 70 exactly to
the upside.
To the upside. I mean, the point is, I've never seen this sort of mirror image flip where you had this, huge bearishness and then bullishness to the upside. So, that being said, when the reversal happened, we then, during the course of this week, made new all-time highs in the S&P, new all-time highs in the NDX, but not in the rut.
Right.
So let's just look at the first two for now. All I want to say is, for me personally, and obviously everybody trading out there has different risk tolerance, different time frame outlook, whatever. I can only speak for myself. I don't like anything new here for two factors, because the S&P is short-term overbought. We've had a huge move in one direction that's very one-sided. We call that one-sided trading. In market profile parlance, we talk about that as being one time framing. One time framing means that every low is a subsequent higher low going up, and you never make a lower low. That's one time framing. And you can look at one time framing in 30-minute time frames, or dailies, or weeklies, or monthlies, or whatever the case. So we've been one time framing, and the fact that we're coming up against these earnings. So to me, not good trade location. And my MO is the same. Those of you who follow my stuff, if you subscribe to Weekly Options Advisory, you know that right now we have one trade on. Now that's very rare for us. Why do we have one trade on? Because it's the biggest week of earnings where all the names that I love, that I trade most heavily, are reporting.
Correct.
Normally we have 6 to 8 trades on constantly, right? I'll usually finish out every week with 6 trades open.
I would have to say that's normal.
Sometimes as high as 8. So I have one for me. Now obviously your risk tolerance or your style might be completely different. So that's where I'm seeing the market in terms of new entries right now. I do want to touch upon what we just said about the rut, because rut is small caps, technically kind of a leader, not new all-time highs, absolutely mired in a range. If we divide it into thirds, we're right in the middle.
Right.
The rut is absolutely stuck.
And you can see where the Russell has been going to the top, to the bottom, to the top, to the middle,
exactly.
to the bottom.
It's been the same range.
It's been a range for about four and a half months now.
Exactly. And now we traded recently almost to the low end of that range. Weekly Options Advisory, again, subtle plug. We had put butterflies. As a matter of fact, you guys remember this from last week. I showed you my trades from last week. I had the put butterflies on.
Oh yeah.
We ended up closing those for a very small profit, and the only reason those even made any money at all is because the rut was still relatively weaker than everything. It wasn't ripping as much as everything or whatever. And now, after that, after a minor rally off that lower end of the range, it's still dead stuck in the middle. So
the other reason you didn't make money on the Russell last week was that implied volatility was much lower last week when that trade was on. It ratcheted up and now has come back down again.
Yeah.
So that's another thing that you want to watch, is that volatility.
Obviously in options it makes a huge difference.
Right.
Obviously, right. So pursuant to what we said in the beginning of the video in terms of what we should be looking at, do you think that traders should add that small caps weakness as a third piece behind potential movement or sensitivity, I should say, to Delta variant, mega cap or mega tech earnings, so let's call it mega tech earnings, right? And maybe small cap weakness?
I think the Russell should be used as a confirmation of a topping out of the prices that we've seen. If we see the Russell degrade below that channel, then we've got a higher potential for
that it pulls everything down.
It pulls everything down.
Yeah, I agree.
If we start to see the Russell maybe find support and make a reversal, even a small enough reversal in some decent sized volume, we can now be a little more comfortable that things are progressing more on the bullish bias.
And I like exactly what you just said. I want to also underscore that, because I've talked about this before, and it's important for new traders to understand. When you are dealing with your individual stock, and remember what Scott just said about the Russell, that he just wants to see it turn up a little, or whatever exactly you said. It doesn't matter, right? When you're looking at the market in relation to, you're long you have a long book, and you're long a bunch of stocks or whatever. Remember, the market itself doesn't need to rip or make new all-time highs. What you should be watching for is simply that the market doesn't fall apart.
Correct.
Right? Because think about it, the market can very often go sideways, and stocks that are higher beta or ones that are just happen to be stronger, they're going to continue to move. It's all just about whether or not the market can hold its own. So I do agree with you in that the Russell just needs to not fall apart, but also very, very important, guys, watch the low end of that channel.
Correct.
Watch the low end of that rut channel, and if the rut degrades further, I agree with you. That is going to potentially start to act as a drag.
Correct.
So far, it hasn't. It absolutely was ignored this week.
Right.
But that's why we're pointing it out, because it could start to act as a drag.
And on that degradation on that Russell,
Mm-hmm.
also kind of look at the volume too. If we've got very small volume, remember that
You mean like on the IWM?
on the IWM.
Yeah.
If we've got very small volume on anything out there, especially in the summer, we can have a lot of amplitude of movement.
Yeah.
But it's where it's going to close itself towards the end of the day, if volume is very light, that you're going to want to say, okay, there's no confirmation. But if volume is heavy,
Yeah.
and we are starting to progressively or continually start to decline in value or price, then you've got a confirmation of both price along with volume.
Very
It
true.
goes back to market profile.
Of course.
What do we look at market profile? Volume at a certain price.
And time. That's right. That's the whole extra sort of dimension that we
Correct.
get from the profile. Absolutely. All right. Let's shift gears into we're going more and more granular as we go. So we started with talking about some fundamentals in terms of what are the potential catalysts that are going to shape the market next week. We've talked about TA we talked about the earnings obviously coming. We talked about TA on the majors, just on the three. Now we're going to go just one last step lower and just talk about sectors, because this is something I've been trying to bring into these videos more and more on a weekly basis, talking about, okay, if you want to know what the health of the S&P is, the health of the S&P is going to be XLK, XLV, XLF, XLI, XLC, XLY, and XLP.
Okay,
If
hold
you
on
think
just a
about
second.
it, that is going to be it.
Let me get the clicker so we can do what we need to do.
right, right.
All right? So,
All right, so
you tell me.
XLK. New highs.
New highs.
New highs. All right, XLV. New highs. XLF. Aha, kind of stuck here.
Oh, did I click wrong?
No, XLF, you click fine. XLF stuck. I personally think, my opinion, why financials are not moving is because bond prices have caught such a big bid, which has brought interest rates, bond rates lower. The whole financial sector likes higher rates, not lower rates. I think the rates are being depressed, which is also, to me, a risk-off signal. I mean, a lot of people have talked about this, but we don't need to get into that as to why the bond market is catching such a huge bid at the same time as equity is catching a bid. Whatever.
Doesn't make sense.
Doesn't matter. It doesn't really make sense, but whatever. But anyway, that's what I think XLF. It is about 10% of the S&P, so it does bear mention that it is stuck in the middle of the range. XLI, industrials,
There we go.
also stuck in the middle of the range, right?
Yep.
Not doing much. XLE, energy, is not that big of a sector in the S&P, but it does bear mention that it has been quite weak. Energy stocks have been weak. They're only about 2 to 3% of the S&P. Communications is pretty heavily represented in the S&P. New high.
Yeah.
Okay. What about staples? XLP. Pushing, but
Pushing.
trying. I mean,
Trying.
but not at all-time highs.
I would
Not
take a
there.
look at the top 10 stocks in there
Right.
and kind of go individual
Right.
instead of the whole
But at
group.
the same time, discretionary is, and
Oh, yeah.
discretionary is like Amazon and all that stuff, right?
Absolutely.
That actually has a huge
It
huge
does.
thing in it, right?
It does. It
So we're
does.
seeing much more strength in consumer discretionary as opposed to consumer staples, but that's the whole reflation trade. That's the whole reopening trade. So
Yep,
it makes sense.
it is. It is.
As a whole, if we put everything together, and obviously totally understood, we're not talking about real estate, we didn't talk about materials, we missed a couple sectors, but they don't have a lot of heavy weight, and I don't think they are real major drivers of the sentiment of the S&P, even though, like, not only are they not drivers of the S&P weighting wise, because, like, for instance, XLRE is like 2% or whatever.
Correct.
They're not a big driver sentiment wise, right?
Right.
If all the REITs start to sell off, like, nobody's like trying to pull their money out of the S&P. I'm saying sentiment wise, it just doesn't.
The money's already out.
Yeah, it doesn't.
By
It
the
doesn't
time
yeah,
everything
exactly,
gets
exactly.
going.
So it doesn't really happen that way. So wouldn't you say that overall, if we look at the 8 or 9 sectors that we talked about, definitely far more bullish than bearish?
Correct.
I think many of them are not in good location territory for new buys, but they're good.
They're positioning to a level that be aware of.
Mm-hmm.
Any sort of drawdown or pullback may set them up better, but I agree.
Yeah.
They're in the no man's land or low probability of further success at this
For
time
now,
frame.
right, exactly. Probably most of them need a little bit of a pullback. And that's really the bottom line of, I think, where we're at with the whole market as a whole, is that I often use the phrase coming up from the bottom. And that's a phrase I use when I'm teaching people about when to buy a breakout and when not to buy a breakout. So it's really simple. Let's talk about the Russell, for instance. Russell has been sideways for 4.5 months.
Right.
If the Russell was at the high end of the range, that could be a breakout you would buy because you're buying a break out of a consolidation as long as it hasn't been going in a straight line from the bottom of the range.
Correct.
And my problem with the S&P and the sectors that we talked about right now, why I don't think we are in particularly good location right now, is because we have come up from the bottom, right? We had the Friday, Monday sell-off, and then literally, like we said, we one time framed and we've gone one-sided trade from there. So even though there are traders who buy new highs, and they must have done it Friday because we're starting to see it really pushing, to me that doesn't make sense. I don't buy new highs when the market has already traveled 3 to 4 days to get there. I buy a breakout out of a more sideways consolidation.
A lot of energy was expended on the way back up.
Right.
Or money, if you want to talk that.
Right.
Is there a lot more to go without some sort of going from excess
To balance.
to balance?
That's right. Exactly.
That's probably what we do need.
That is exactly true. I think that's a good spot to end it on. What do you think?
I think so
That
too.
was very good. All right, my name is Peter Rezicek from ShadowTrader.net. This is my colleague Scott Gillum
Thank you.
from ShadowTrader.net. On behalf of the entire Shadow Trader team, I can't really even say Philadelphia, Pennsylvania because we're far flung. You're up here, I'm down
I
there.
am.
We're all, on behalf of the entire Shadow Trader team across the globe,
Very good.
I wish you good trading and good night.
Good night.